I think the economy is in a lot of trouble. I think we're a real mess. Many people are struggling to get by. People have their savings depleted, record amounts of debt, despite what they're being told by the media and Wall Street that we have a great economy. They know that's not the case. We're running record high trade deficits, record high budget deficits, and the crisis is going to come because the numbers are exploding exponentially and the interest on the debt is spiraling out of control. Inflation is already reaccelerating, and I think we're heading towards a much worse financial crisis than what was experienced in 2008. And I was warning that this was going to happen years before it did. I mean, I saw this train wreck coming from a mile away.
So you think that we are headed into a recession?
I think we're already in a recession. The government has been hiding it behind these phony numbers. I think we're going to keep on kicking the can down the road like we've been doing. The recession is going to get a lot worse, and it's going to get so bad that they're not going to be able to cover it up anymore.
I mean, do you see that massive recession? Actually, it sounds more like a depression happening regardless of what any actions are done at this point.
Yeah, I mean, it's inevitable. I mean, it's going to be bad either way.
Peter Schiff, sir, welcome back to the show.
Well, Todd, thanks for having me back on your show.
Well, before we get started, I'm kind of curious. I know the last time that we had spoken, Lauren, your wife Lauren, was launching her album or debut or new songs with her band Laughing Cats. So give us an update. How are things going with that?
Yeah, well, she's released 3 songs so far under the Laughing Cats, I guess, label. I don't know if you call them labels anymore, but she's got a Spotify account, Laughing Cats. And so her first song was GYB. Then that was followed up by Jerk and then Electric. So she's got 3 songs. All those songs are out now on Spotify. She's also got some videos on YouTube if you go to the Laughing Cat channel, a couple of videos of her songs. But
awesome.
The newest one is Lucy, and that one comes out on Friday, February 28th.
Wow.
So they're all really good songs. More people should listen to them. A number of people have, but, in the scheme of things, it's small. But, she sings them herself. She wrote all the lyrics herself, and her bandmate who was initially well-known because he was the guitarist for Third Eye Blind, Tony Frattinelli, but he did the music. Wow. And so together, these are all original songs that she wrote and sang, and that Tony, did the music. So I think they're all really good. And there's a lot more coming. I think there's about 11 or 12 in the album. And so they're just kind of coming out in like a waterfall fashion. So, one, then another, then another. So people should definitely go check them out.
Yeah, well, we'll publish Lauren's links below so everybody can definitely check her out. Shout out to Lauren Schiff. Absolutely. So you've been covering, we've got a lot, man, I have a lot to cover with you in a short amount of time. So I'm excited. The last time that we actually podcasted together, I was at your home in Connecticut, and it was, of course, pre-Donald Trump. Actually, we may have spoken another time afterwards, but certainly not since the election. But, for everyone that doesn't know, I mean, you've authored books. I mean, you've been covering the financial markets for a very long time. And many people don't know that you actually worked on Wall Street. So if it's okay with you, I'd like to play a quick clip from your YouTube channel. You were literally on the streets talking about what you called the 99%. I think is it called Zuccotti Park in New York City? This is back in 2011. So is it all right if we play just a quick clip here?
Yeah, that was from the Occupy Wall Street movement.
Yes, let's play. Let's have a listen.
All right, this is Peter Schiff, and I've come down here to Occupy Wall Street to represent the 1% and see if I can have a dialogue with the other 99%, maybe see if we can find some common ground, and maybe I can help educate the people to direct their protests to the more appropriate source, because it's my opinion that they shouldn't be here occupying Wall Street. They should be in Washington occupying Pennsylvania Avenue. They should be protesting in front of the White House, in front of the Federal Reserve, in front of Congress, in front of the Supreme Court, not down here protesting capitalism. capitalism is the only solution that they have to their problems. It's not capitalism that has failed them. It's socialism. It's corporatism. It's crony capitalism. It's fascism. That is the problem. Capitalism is the solution.
So, Peter, I believe the 99% that you referred to back then still thinks capitalism is bad.
A lot of people think it's bad, but a lot of people don't understand it, and that's why they think it's bad. They think what we've got is capitalism when it's not. But you're always going to have people that don't understand, basic economics. But I think more Americans do. I mean, I think a lot of people voted for Trump. A lot of those people may have a much better understanding of capitalism than you might think.
You had said, talk about crony capitalism in specific that is, I think a lot of people may be confused about. Can you tell the audience the difference between true capitalism and crony capitalism?
Well, true capitalism is a free market. So you don't have the government picking winners and losers. You don't have the government subsidizing certain industries or certain businesses and then penalizing others. You have a real level playing field in a free market. Everybody is subject to the forces of supply and demand and competition. Everybody has to win customers fair and square in a free and open market. And we don't have that, particularly in banking, which is really what the Occupy Wall Street movement was about, and the financial crisis in 2008 and the subsequent government bailout of the banks. All that was a consequence of government meddling in the economy, government subsidizing banks with deposit insurance, a government guaranteeing mortgages with Fannie and Freddie. And then the bailouts, of course, by their nature, is not capitalism. If we had capitalism, the banks that were in trouble would have been allowed to fail. There wouldn't have been any government to prop them up. And so everything that the protesters were upset about was a function of the crony capitalism. And I was on the same page. I am against crony capitalism as well. I want real free market capitalism, and we still don't have it. We're still kind of a long way from what the framers of the Constitution envisioned and what, we had in this country for, a substantial portion of our history. In fact, all the real economic growth, the Industrial Revolution, the movement of millions and millions of people from the farms to the factories, the millions and millions of immigrants that came in from around the world, all of that took place under a much purer form of capitalism than what we have today.
What's your assessment of the current state of the economy right now?
I think the economy is in a lot of trouble. I mean, I think that's why Trump was elected. The voters are living in this economy, and despite what they're being told by the media and Wall Street that we have a great economy, they know that's not the case. They're struggling to get by. Many people are working 2 or 3 jobs, whereas they used to be able to pay the bills with one. They can see prices rising rapidly for everything they need to buy as their debts are rising. People have their savings depleted. They've got record amounts of debt. The interest rates on that debt are much higher now than they've been in many, many years or decades. I think we're a real mess. We're running record high trade deficits, record high budget deficits, and I think we're heading towards a much worse financial crisis than what was experienced in 2008.
So you think that we are headed into a recession? I mean,
I think we're already in a recession. I think the government has been hiding it behind these phony numbers that understate inflation. But I think the inflation, the recession is going to get a lot worse, and it's going to get so bad that they're not going to be able to cover it up anymore. So the statistics will finally reveal what voters already knew, right? If you look at the exit polls from the election, the reason people voted for Trump was the economy. Now, the economy was the issue because it was bad. If the economy was good, they would have voted for Harris. They would have voted for 4 more years. They voted for Trump because they wanted a change. Well, why would they want to change a good economy? They wouldn't. They want to change a lousy economy because it's in a recession.
Do you think that President Trump's doing a good job right now?
Well, he's done some things that I think are pretty good. But where I think he's really failed is he has been encouraging the Republican Congress to pass this big beautiful bill, which also includes a $4 trillion increase in the debt ceiling and includes an increase in government spending, so that the deficits that Trump inherited from Biden will be larger if the bill that he now supports is enacted and signed. So I would much rather see the president telling Congress, I don't support that bill. And if you pass it, I will veto it because I don't want to increase the debt ceiling. Trump was asked a question at his, first cabinet meeting yesterday. Or somebody asked him about the budget. He said, look, I want to balance the budget sooner than you think, maybe in 1 or 2 years, or maybe sooner than that. Well, how about right now? If he wants to balance the budget sooner than a year, then do it. Don't talk about it, do it. And the way to do it is tell Congress, I'm not going to sign an increase in the debt ceiling, because what that means is that the budget has to be balanced right now because we can't borrow any more money. So, talk is cheap and actions speak louder than words. And if I was at the, Resolute desk instead of Donald Trump, that's exactly what I would be doing. They would have to pass an increase in the national debt limit over my veto, which would mean two-thirds of the Republicans, right, or two-thirds of the House and Senate, and a lot of Republicans would have to vote to override my veto and run up the debt.
Do you think he's doing this or supporting that bill now so that sort of like a negotiation tactic, maybe with the tariffs, maybe thinking that, we'll pass it now, but we have a much more aggressive plan that's
No,
coming behind that?
do not. I would not. We're at the debt limit now. He's got all the cards. Just don't sign it. I mean, that's the only way. Congress is not going to stop spending unless you force their hand. And Trump has the power of the veto. He can force Congress to really cut spending, not just, play around the edges with DOGE, but actually get deep into the heart of the matter with real substantive cuts that take place right now, not, at some far off date in the future. And also, I don't like all the tariff threats personally. I mean, tariffs are taxes. They're taxes on the American people. The American people need to pay more taxes unless we're going to cut spending, because the government is spending a lot more than it's collecting in taxes. So level with the public and say, look, we got to raise taxes because we're spending too much money. And the way I'm going to raise taxes is tariffs. And it's going to mean that everything you buy is going to be more expensive because of these tariffs. And that's the reality. I mean, I don't like trying to fool the public into believing that they're getting something for nothing. This whole idea behind an external revenue service is nonsense. There is no external revenue. All the revenue is generated internally. Americans pay tariffs just like we pay sales taxes. It's the same concept. It's a consumption tax. We're taxed based on what we consume. In the case of a tariff, we're taxed if we consume imports. But also, if imports are going to be more expensive, then the domestic products that compete with those imports will also be more expensive because they have less competition. So they're going to raise their prices. That's why a lot of U.S. companies love the tariffs, because it means they can charge higher prices. So that they like that. But it's the American customer who's going to pay those higher prices.
So it's fair to say then you're not buying the fact that these foreign companies will eat that tariff
No.
and not raise prices. You think it's 100% coming
Yeah.
across the border?
Why would they do that? I mean, why would they eat the tariff, especially if it means they lose money on every sale? I mean, these are companies are in business to make a profit. So let's say something cost them $1 to make it, and right now they're selling it at $1.15. Um, they're certainly not going to sell it for 90 cents and lose $1 on every sale. I mean, how are they better off doing that? Right? They're better off just forgetting about the U.S. market and selling to other consumers. Now, of course, they won't have to forget about the U.S. market. They just raise their prices, right? And they'll lose some U.S. customers, but they're not going to lose all their customers. Some customers won't be able to afford the 25% increase, and so they'll stop buying. But let's say 80% of the customers can pay the higher price. So they'll still keep 80% of the US market. And then they'll take those other goods and sell them to the next highest bidder. So somebody else is going to catch a break. Maybe instead of selling them to Americans, they'll sell them to Europeans or to Chinese, whoever, but they're not going to just eat the tariffs just to preserve our market. I mean, what if they're not making the money, what's there to preserve? We're not supposed to be a charity here. We're supposed to be customers that actually pay.
Well, we've become so dependent on imports. I mean, a lot of just take building industry for one. I mean, a lot of the building materials and supplies that we put into our homes are from other countries. And since the 1970s, it's been the way.
Yeah, we are actually more dependent on imports now than ever before. And that's a bad thing. And Trump is right about that. But, the solution is not as simple as he thinks. And Trump mischaracterizes the current nature of the relationship. Trump believes that these trade deficits are the world taking advantage of America and that they're somehow screwing us over and we're getting, they're getting something for nothing. The opposite is true. We're getting something for nothing. They're getting the short end of the stick as far as the current situation because we get to consume more than we produce. We get to borrow more than we save. So our standard of living is higher today as a result of these trade deficits. Now, over the long run, Trump is right. We are impoverishing our nation with these trade deficits because our foreign creditors are accumulating assets. So they're taking their trade surpluses and they're buying U.S. stocks, they're buying U.S. real estate, they're buying U.S. debt. So now we are, beholden. We owe the owners of those assets rent, interest, dividends. So they accumulate assets, we accumulate liabilities. We get poor, they get rich. But in the short run, our life is better, right? But what we're doing is we're selling off our cows so we can have milk. And, at the end of the day, if we can't import milk and we no longer have any cows, we're in a lot of trouble. But to address these imbalances is going to require a severe U.S. recession. Because we have to stop consuming and we have to start saving again so we can build the factories that we no longer have, so we can rebuild the supply chains that no longer exist, so we can train the workers to do these jobs because we don't have the workers right now. We wasted time sending them to college studying sociology, right? So we got to get those kids, into a factory. So it's going to take a long time to be able to produce what we now import.
Do you see that recession that you just talked about, or actually it sounds more like a depression? Do you see that happening regardless of whether something like the tariffs go into effect? Or, so is the debt that massive that there is no other way? I want to talk about DOGE, but I want to stay on this for a minute. Do you see that massive recession that you just mentioned happening regardless of what any actions are done at this point?
Yeah, it's inevitable. I think if we embrace it under our own terms, it won't be as bad. It's going to be bad either way. But if we get out in front of it and say, okay, let's deal with the issue and deal with the short-term pain, is better than waiting for a crisis to develop overseas in the dollar and in our bond market. But ultimately, I think that's what's going to happen. I don't think any of the politicians, including Trump, have the fortitude to do what it takes and to level with the American public about, what's going to be necessary. Nobody wants to be the bearer of that bad news. There's a tendency to shoot the messenger, especially when it comes to politics, right? And so I think we're going to keep on kicking the can down the road like we've been doing until there's a crisis. And the crisis is going to come because the numbers are exploding exponentially with our debt and our our trade deficits and our budget deficits, and the interest on the debt is spiraling out of control. Inflation is already reaccelerating. It's risen now 4 or 5 months in a row. If you annualize the last month now, CPI is up to about 6%. Consumers are catching on. Consumer expectations now of inflation are the highest they've been since 1982 at 6%. So, I mean, the Fed is completely wrong when it says that inflation is solved. Expectations are well anchored at 2%. I mean, that you got to look way, way in the rearview mirror to see anything like that. But if they just open their eyes and look ahead, inflation is hot, way above 2%, and it's going to go much higher. Interest rates are much too low. Instead of talking about cutting rates, they should be hiking them now, but they won't because of the fragile nature of the economy and the enormity of the debt. So we're going to have stagflation. We're going to have a recession and rising inflation, which is the worst possible outcome. The Fed has no ability to deal with that. They have no plans for that. All they do is hope that they don't have it. That's what they told the press when they were asked, when Powell was asked, "What's your plan for stagflation?" Powell responded, "Well, we're just going to hope we don't have it," because that's all they could do is hope. And of course, they just did these stress tests for the banks, and the one economic environment that they didn't test for was stagflation, because they know every major bank would fail that stress test. So the only economic situation they asked the banks to test for was a recession where interest rates and inflation go way down. I mean, that's not that bad. How about a recession where interest rates and inflation go way up? How about stress testing that? I mean, that's stress. And of course, they didn't do it because they'd all fail. So, why bother?
Yeah, they can't sustain. I hope you're enjoying the interview so far. I just wanted to take a brief moment and let you know that this podcast is brought to you by SachsRealty.com. Here at Sachs Realty, we're committed to bringing you the best real estate education and helping buyers and sellers achieve their real estate goals. If you haven't subscribed to our channel, please consider doing so now. And don't forget, we're on every major social media platform, so you can follow us there as well. Now back to the show. Do you think Trump, here we are, the day this video drops, tariffs were to be in place. There's talk now that Trump wants to push it, I think, to maybe April 2nd, I think I saw.
No, well, he just said today it was March 4th, right?
Oh, yeah, so March 4th. So this is dropping on the 1st. But yeah, so the 4th, but I thought that I just read something where they said, I think that Trump was sowing confusion on the tariffs with Canada and Mexico. And I think I saw April 2nd as a pushback.
Yeah, well, there's a news story today that he came out and said, no, it's 25% tariffs on Mexico and Canada on the 4th, plus an extra 10% on China. Not on China. It's basically on Americans buying Chinese goods, on Americans buying Canadian or Mexican goods. But yeah, he had called the tariffs off because he said, oh, they're going to move some troops to the border, and now they're back on. Look, I don't like the on again, off again. He thinks he's negotiating some concessions, and there's a good chance that we won't get the tariffs because they'll come out and they'll do something, and he'll call them off and claim some other kind of victory. If tariffs are so great, just put them on. Why keep threatening them? Why keep postponing it? If they're going to do such a great thing, just put them on right now, right? And so the tariffs aren't great. They're just taxes, and they're paid for by Americans. Now, look, would I prefer tariffs to income taxes? Sure. But that's not the choice. The choice isn't, hey, we're going to get rid of income taxes and have tariffs. We're going to have tariffs and income taxes at the same time. And we're still going to have huge deficits. So, they're not even high enough to raise enough money to balance the budget.
So I guess the idea is that the tariff should be the consumption tax because, if you can't afford to buy the product and don't buy it, will be interesting to see. Peter, what do you think the time period of when that would really show up? So let's just say the March 4th, the tariffs go in place, how long would you anticipate before we start seeing it on the shelves?
Well, I mean, obviously, some of the products are already here. They were imported before the tariffs, so they won't be immediately impacted. But I think it will push up demand because some people will try to quickly buy those products while they're available before the new ones have to come in subject to the tariffs. Um, in some cases, I don't know how long the tariffs are immediately added to the price, so it's not like the company, it's that they get added right when they come in. Now, is it possible that the companies may somewhat reduce their prices to offset some of the tariffs in the very short run? Maybe. It's hard to say. Depends on how quickly they can find other buyers for those products at higher prices. So there's no way to know exactly, uh, you know, how much prices will go up and how quickly they will go up. I mean, the maximum, right, you'd say is by the amount of the tariff, and it might vary by product. Uh, you know, um, we import 90% of our seafood, and I'm not sure how much of it comes from Mexico and Canada, probably a lot of it. And so, right there, you'll probably see an immediate impact on those prices because if they don't sell the seafood to us, they'll sell it to somebody. They put it on ice and they can ship it. But if we only produce 10% of it ourselves, I mean, there's no way we could up the supply. We couldn't fish that quickly. Now I guess Americans could just stop eating fish and just eat more poultry, or something else that that would happen too. The demand would go down because the price would go up. But I mean, people are going to feel it. Everything that is subject to tariff is going to be more expensive, and everything that competes with goods subject to tariff will be more expensive. Now, some goods might go down in price because of the tariffs. I think what you'd have happen is goods will get more expensive, but a lot of services may get less expensive. Some of the domestic service providers may be forced to lower their prices because there'll be less demand for their services because consumers will have less money left over to buy those services after they pay the higher products for the prices for the products that they need.
Let's talk about DOGE for a minute because that seems to be something that is building a lot of controversy in the news. I mean, not just in the news, but hearing people talking about it. A lot of people are very angry. I'm obviously sitting in a state that is very blue, and same with DC. And a lot of these cuts, federal worker jobs, are right here in Maryland, in our state. Our clients are starting to wonder if their job's on the chopping block. I know at one point when they were first talking about DOGE, setting up DOGE, you were saying, I think you and I even had a conversation about it. You had said that you didn't think that he would be able to cut enough because he'd have to go after things that he's not willing to do, or that would really, the big ticket numbers like Department of Defense and Social Security and things like that. But then I heard in one of your videos on your podcast, and by the way, all of Peter's links are in the show notes, and every sighting that we're talking about here today, we'll drop those links as well. But I did hear on one of your shows where you were kind of, backing off of this won't work, this DOGE won't work, that maybe you thought they were doing some things right.
Yeah, well, remember when we first talked about it, this was before, Trump was inaugurated. Or yeah, I think even
Right.
before, I forget. But initially, the way DOGE was described and presented to the public by Trump, it was a completely independent organization that was not going to have any direct connection to the government. It was like a private think tank, which we have a number of those, like Heritage or Cato. And to me, it was reminiscent of the Grace Commission, which Ronald Reagan helped establish, which again was a private group that looked over the government budget and made recommendations as to how they could get rid of waste, fraud, and abuse. And all of the recommendations, and there were substantial recommendations for savings made by the Grace Commission, but all of them were ignored by Congress. Congress did not vote to enact anything that was recommended. So it was a complete, waste of time. And so I thought that DOGE would be something like that. But then Donald Trump actually brought DOGE into the government and made it a part of the government operating out of the White House. I think he renamed another uh, you know, department, or not department, but some other kind of program they had, and they just renamed it DOGE, and kind of, gave it new tasks. And so they're actually in there doing stuff and making cuts. Now the question is, will all the cuts they're making hold up to legal scrutiny? Because there's a lot of challenges coming from Congress and coming from government employee unions or others that are benefiting from this spending, that says that the executive branch doesn't have the constitutional authority to do this, that it's stuff that has to be passed by Congress. It can't, just be done by executive order. So we'll see. But, what they are going after is, the waste and the fraud. Not so much getting into the meat, right? They're saying we're just trimming the fat, but we also need to cut the meat, you know. And the problem is, whenever you have government, by definition, there's going to be waste, fraud, and abuse. There's no way to eliminate it. It's kind of, part of the way it works. I mean, that's the nature of the beast. That's why you want to have a small government. That's why you want to give a government as few tasks as possible. Because whatever you have the government do, it's going to be ripe with waste, fraud, and abuse. Because you don't have the type of market forces that would prevent waste, fraud, and abuse in the private sector, right? If I got a company, I'm not going to waste my own money, and if I do waste my own money, I'm not going to be able to compete with other businesses that aren't wasting money, because my prices will be too high. And it's harder to defraud somebody in the private sector, because someone in the private sector is looking out for their money. If someone takes my money, I'm going to notice it. I'm going to care. I'm going to try to get it back. But government, there is no incentive to be efficient. Doesn't matter how much money you waste. There is no competition. There is no, if you're a bureaucrat and you waste money, it doesn't reduce your pay. What do you care? Right. And the government is so big, it's easy to defraud it. It's easy to, and nobody notices. And part of it too is human nature. A lot of people wouldn't want to steal directly from me, because they'd feel bad if they took something away from me. But a lot of people don't feel bad about stealing from the government. It's like, it's like a faceless, victimless crime. And they figure, look, there's so much money there. The government's spending 6-7 trillion a year. They're not going to miss 10 grand, and a lot of times they don't even think about it as fraud. But, the government sets up a program and you just make sure you qualify for it. Sometimes it's legitimate. Let's say there's a program where you have to earn less than $2,000 a month to qualify. Well, you go to your boss and say, hey, you're paying me $2,100. I'm going to work a little less, cut back my hours. I want my salary to go down to $1,900 so I qualify for this program, right? That's not illegal, but it is abusive, right? That you changed your circumstances to get the government money, but that's how it works. Or you might say, after you have your boss cut you back, you may take a job under the table where you get paid in cash, and now you are committing fraud. But this stuff happens all the time with government programs. So, you got to get rid of the program if you want to get rid of the waste, fraud, and abuse. And so I don't think that DOGE is going to get us out of jail, as far as we're not going to balance the budget or come anywhere close. We're not even going to offset the spending that the Republican Congress wants to increase. And we're not even going to cut enough to offset that. But we have so much more that's going on autopilot. Interest on the national debt is now, 1.2 trillion a year, just interest on the debt. And that's going to be 2 trillion next year. So I think the deficits are more like 3 to 4 trillion a year right now. I mean, what are they going to cut? I mean, it's insignificant in the scheme of things, but yeah, do it. The main thing I like about DOGE is it's shining a light on government fraud and corruption, because a lot of people didn't realize how much fraud and corruption there is. I mean, a lot of people have a natural tendency to trust government and to be skeptical of a businessman, right? It's corporate greed. It's the business guy that's out to screw me. He's out to gouge me. When in reality, the businessman is out to please you. He's trying to satisfy your needs and your desires and do a great job. You know, the motto in business is the customer is always right. Even when they're wrong, they're right. Right? That's capitalism. The customer is in charge. In government, they have nothing but contempt for the customer, which is the taxpayer, who just has to pay whatever taxes are imposed. And you got no choice other than the jail. And so typically the most corrupt, greedy, dishonest people work for government. That's where they find a home. And to the extent that they're not corrupt and dishonest when they get to government, if they stay there long enough, they become that way. They get corrupted by the power and the office. So the fact that now people are realizing this, that's great, because then more people won't like government, which is the way it's supposed to be. Government is a necessary evil. At its best, it's a necessary evil. At its worst, it's an intolerable evil. And I could argue that we've already, gotten to that level of government. But even in its best, it's not good.
So you're for these massive cuts that are happening?
I'm for more even bigger cuts. Yes. I'm for any cuts we can make.
When we've had our talks in the past talking about the housing market, I think one of the things that you had said that was holding up the market was, and it's been frozen. I mean, you're exactly right. When I came to see you in Puerto Rico, you were saying, hey, look, the issue that we have right now with the frozen housing market is that the asset is the loan, the mortgage. And we know that the asset prices now are priced when these mortgages had those 2 and 3 handles, meaning for those that don't understand that a lot of the mortgages were either refinanced or their initial 30-year fixed rate mortgage during the pandemic boom was in the 2-something or 3-something percent for a mortgage rate for fixed for 30 years. Obviously, that has affected a lot of people because they're saying, well, these prices now of houses, if I sell my house, where am I going to go? And now I'm going to pay a lot more money because my mortgage is going to be more and the price of the home is more. So it really is no reason for me to sell.
Yep. In fact, for most Americans that own a home and a mortgage, the asset is the mortgage. It's not the home. Right? What they have that's so valuable is that 30-year fixed rate mortgage. Maybe there's not 30 years left on it anymore. Maybe they got 25 years, but they got 25 years of making 3.5% payments. That's the value. That's what they don't want to give up. And if they sell their house, they lose that valuable asset. So they're going to stay in their house. Now, they may rent it out, right? That might happen because they could rent it out and get a higher rent than what they're paying on their mortgage. But they can't sell the house without losing that mortgage. And you're right, they can't afford to buy another house because they can't port that mortgage over to the new house. But, now maybe Congress will pass something that says you can move your mortgage from your initial house to a new house, but that would really screw over the banks because the banks are hoping that you sell your house so they get out of jail on that mortgage, because the mortgage is your asset. It's the bank's liability, or whoever owns that mortgage, whoever is holding on to a 30-year fixed rate mortgage and they're collecting 3.5%, that is a liability. The sooner you pay it off, the better. Right? So the worst thing that can happen to the lender is that they're stuck till maturity. And I was warning that this was going to happen years before it did. I mean, I saw this train wreck coming from a mile away.
Peter, I want to get your opinion on mortgages moving forward. And pull back what you had said before, but before we do, I just want to say that for the people that are needing to sell their homes, we're starting to see where this inventory, even though it's nothing to the scale of a panic, yet we are seeing inventory in a lot of markets go up 40, 50, 60. Even I saw one that was 300% up over last year's numbers, but still not, that didn't say very much because last year's numbers in that specific market weren't hardly, any at
Yeah,
all.
I
So
mean, in some cases, people are going to have to sell their home. Maybe a lot of people in the DC area, if they get fired, they may want to sell their homes. They may not want to stay in DC. And so there could be a glut there and the prices will come way down because there's probably not a lot of people that want to buy them. I mean, maybe the new Trump appointees, maybe they need housing. And so they'd be able to take advantage of that. But the problem is, right, if you need to sell your house, the buyers can't get a 4% mortgage anymore. They're paying 7%. And so most people who buy homes with a mortgage buy the monthly payment. They don't even really think about the price. They think about what are my payments, and they compare that payment to what they're earning and their budget. And so if the mortgage is 7% and not 3%, the monthly payment is much higher. So I either have to buy a much smaller house that's less money, or I got to buy the house I want at a much lower price. But, if the house that I have to buy is too small for me, then why even buy it? I might as well keep renting. Um, but, there's not a lot of pressure on the sellers to lower their price because what are they going to do if they sell? I mean, where are they going to live, especially if they've got a low mortgage? But if the seller loses his job and can't even pay that low mortgage, well, now, there's going to have to be a transaction. And now not all homeowners have fixed mortgages. There are people that have ARMs and so these ARMs are going to reset. There are people that took out a fixed rate mortgage where it was only fixed for the first 5 years or the first 10 years, and then they reset. And so these guys are going to have a shock when the resets come in.
speaking of the ones that are selling or that do need to sell, and you're right, the jobs, that is sort of like the last thread. Uh, Realtor.com just published an article on February 27th, and it's starting to hit mainstream media where they weren't really talking about this before. All they were saying was it's rainbows and sunshine and that prices are going up year over year. But it says home prices are finally cooling. Nearly 17% of sellers are slashing prices as more homes linger on the market. And it says that they've cut prices significantly. I mean, it dates back to 2016 when we've seen these types of price slashes on homes, and that the high share of price reduction could signal further price softening in the coming months. And I think a lot of people don't realize that since these asset home prices are set where they were allowed to get to because of the 2 and 3 and or just sub 4% mortgages, that's going to take a lot of the equity back to these prices back. It could back to like a pre-2020 level.
Yeah. Well, one of the other factors, though, that's going to mitigate that is the rising cost of new home construction. Because if we get these tariffs coming in, then everything you need to build a home is going to be more expensive, like the copper, the lumber, the steel, right? All the stuff that goes into construction of homes is going to be a lot more expensive, which means that if you want to buy a new home, it's going to be a lot more expensive. Now, what it probably means is that fewer new homes are going to be built because the developers are going to realize that there's not going to be a market for these homes because they're going to be too expensive. And also, to the extent that Trump is successful in, getting rid of a lot of the illegals and preventing illegals from coming in, a lot of illegal labor is used in construction. There are a lot of people working, to build homes. And if you reduce the supply of labor, um, then labor costs are going to go up to build homes. And even if um, it wasn't the illegals that were building homes, they were doing some jobs. And if they're not here, and now the wages go up in those jobs, some people that were working construction may say, I'll take that job instead. It's just, labor is fungible. So if labor costs go up because we don't have as many immigrants, and material costs go up because of the tariffs, and they're going to go up because of inflation anyway, which we're going to get in addition to the tariffs. We could get to a point where the whole new home construction industry grinds to a halt. And so the only homes that will be available for sale will be what's on the secondary market. So that would help the prices of those homes, help support them.
Not going
But
to
it
help
also
Wall
it
Street.
also means that a lot of jobs in construction get lost, right? Because,
Yeah. Well, I can tell you too, I mean, construction's not easy. And the friends that I have, I mean, I've been in construction since 1989 and there for many, many years. For 2 decades, I was out doing the physical work. And I mean, I don't care. It does take a toll. I mean, doing physical labor, I mean, there's only so many times you can fall and, you get tired carrying stuff and we depend on youth for a lot of these hard labor jobs. And the youth, from my experience, our kids don't want to do these jobs.
well, yeah, and especially too when the government gives them a better deal. That's the problem. I mean, a lot of people would work if they had no choice. But if they get all kinds of freebies from the government, then to a lot of people, that's more appealing. And so able-bodied Americans should not have that choice. If you're able to work, then you better go out and work. And in fact, I don't even like the government providing money to people who aren't able-bodied because they lie, they pretend, they commit fraud. So I would rather have private charities taking care of people who really can't work, right? Because they're going to do a better job of vetting the people to make sure that they're actually in need and they're not just, scamming the government. So we got to get rid of all these programs that disincentivize work and subsidize people for not working.
Peter, let's talk about mortgage rates because this is something that I think, and what you had said to me in previous conversations is you thought that mortgage rates were going to go higher. And there's actually a site, you had said double digits. You had said, you know what, these mortgage rates, they're going to go up. They're not going to come down. And there is actually a site that is predicting where in 2028, now they do say that mortgage rates, I think it's in 2027, will go back down for maybe May and June. I think it is for in the fours. I mean, who knows, but they're predicting this. But then they also predict by 2028 that we'll see double-digit mortgage interest rates. Do you still believe that mortgage rates are going to go higher, and why?
Well, they're going to go higher because inflation is going to push up rates for everything. So not just mortgages, but also the risk associated with mortgages, not just inflation, but default is going to go up. And so lenders are going to have to be compensated for making those loans. Look, you remember when mortgage rates were in the double digits. It's not like, that doesn't happen. And the only reason they've been so low is because the Fed has kept rates artificially suppressed. But eventually they're not going to be able to do that anymore, and rates are going to go up. And the other reason is because of the government standing behind so many mortgages through the FHA, through Fannie or Freddie. There's a lot of talk about privatizing Fannie and Freddie again. I don't know how you do that without making it clear that there's no longer a government guarantee. But they're guaranteeing a lot of mortgages. And if the government doesn't guarantee those mortgages, the rates are going to go up. Um, and especially, they guarantee mortgages even with very low down payments. Without that government guarantee, the down payment requirements would be much, much higher. But look, everybody is going to pay more money to borrow. I mean, look at credit card interest rates; they're almost 25%. Why the hell is that? Right? It's because of the risk, because so many people don't pay. Right? It's not so much that the rates, right? Because the rates have only gone up from, short-term rates have gone from 0 to 4.25, right? But credit card rates have gone more from, like, what were they before? 12, 50, I don't know, up to, they've gone up way more than the Fed.
Yeah.
And
Yeah.
and that's because of the rising risk of default. Right? The banks, you when you make your payments, you have to pay for all the guys that don't. And right now you have a record number of people that are making the minimum payment. And that means, it's not going to be long before they make no payment at all if they're making the minimum. I mean, if someone's making the minimum payment and interest rates are 25%, they got no choice, right? I mean, a normal person would pay off 25% loan as quickly as possible. You wouldn't make the minimum payment on a loan, you know. So that's because they don't have any more money. And so the next thing is they're not going to make any payments. That's coming.
Yeah, you keep owing more every single month. And I remember, I don't know if they're doing that now, but I can remember before and during the financial crisis, people that weren't paying their credit card payments were actually getting interest payments or interest charges that were pushing them higher than their credit limit, and then they were banging them with over the credit limit fees,
Yeah, the
on
problem
top of
too,
that.
when you have a balance on your credit card, you start paying interest on your new charges the day you make the charge, right? But I mean, if you pay off your balance in full every month, you never pay any interest at all, even though you actually get a loan for maybe 6 weeks, right? But the minute you have a balance that's unpaid, then interest accrues every day, the minute you make a charge. It doesn't start when you get the bill. So by the time you get your first bill, you've already been charged interest on the stuff that you just recently purchased.
Well, let's talk about Bitcoin, the stock market, gold, and silver, and I want to start with Bitcoin, Peter, because I know you love it so much. Bitcoin, by the way, we could pull it up here. It is down. It has gone up a little bit since yesterday, but it's still, if we look at this chart, this max chart, we could see that it definitely looks like it peaked and it's coming down. But if I would have invested $5,000 in Bitcoin in 2016, I'd have almost $1 million on it today. Are people going to get wiped out, Peter, with Bitcoin?
A lot of people are going to get wiped out. Yeah, a lot of people made a lot of money. A lot of people think they made a lot of money, but they haven't because they haven't sold, right? That's the mantra. Never sell your Bitcoin. Well, if you never sold any Bitcoin, you haven't made any money yet, right? It's like the old gambler song, don't count your chips while you're still sitting at the table, right? Bitcoiners are counting their chips every day, right? But they're still in the game. They haven't sold. But yeah, Bitcoin went way up when Trump was elected. It went from about 60 to 60 something thousand before the election up to almost 110,000. Got to 109,000. As we're talking, it's back down at about 84,500. So it's still much higher than it was before Trump was elected, but it's down about 14% on the year. And it's certainly down since Trump was inaugurated. I think that the short-term risk is that the market drops back down to where it was before Trump won, which is probably 50 to 60,000. The question is, how long does it stay in that range and where does it go next? I think that if we don't get the creation of a strategic Bitcoin reserve and some type of commitment legally where the US government is going to be going into the market and actually buying Bitcoin, if that doesn't happen, then Bitcoin is going to break substantially lower from there. And people are going to get just completely wiped out. I don't know what the odds of that are. I think it is less than 50-50. I don't think Trump is going to do that. I don't even know that he has the legal authority to do that. I think that's something that Congress would have to enact. The chances of Congress passing a Bitcoin bill are zero, unless maybe they can cram it into the debt ceiling increase or something. But there's no way they're going to straight up vote for it. There's no support for that in Congress. And I don't think Loomis has the clout to get it into a reconciliation or something. So I don't think Congress is going to do it. Trump would have to do it by executive order. But if he was going to do that, he would have done it already. So I think like Trump was smart politically in recognizing there was a voter block in Bitcoin where they were single issue voters. If you promised to make them rich by pushing up the value of their Bitcoin, you got their vote. And so Trump said, hey, these are easy votes to get. I just got to come out pro Bitcoin and I get all these votes. Plus, the whales in Bitcoin had a lot of money. And he said, hey, how do I get money from these Bitcoin whales? I just got to come out pro Bitcoin. And the biggest donors of the 2024 campaign was crypto. So Trump got a lot of money from Bitcoin whales. And, he used them. He got their money and he got their votes. That's politics, right? And so, but I think Donald Trump thinks it's already done. I think he thinks he's already paid him because Bitcoin rose to 100,000 and 9,000. Everybody who gave Trump money had an opportunity to sell their Bitcoin at a huge gain. He knows that. All the donors that gave Trump money were able to sell their Bitcoin over 100,000 and make a lot more in profit than they donated to his campaign, right? So I think Trump thinks that he's paid his debt, right? I gave you guys a big Bitcoin rally. He even came up when Bitcoin got to 100,000. Trump said, you're welcome. He said, Bitcoin is at 100,000. You're welcome, guys. So he knew it was because of him. And everybody who wanted out had the chance to sell. Of course, the problem is a lot of people were too greedy to sell because they were waiting for 1 million. Well, that's not Trump's fault. I don't think Trump is going to look at it. Now, he milked it a little bit too. He was able to make a bunch of money on Trump coin and Melania coin, just a little, yeah, so he cashed in a little extra on around Inauguration Day. But I think that's it. I don't think this is the crypto president. I think he's got much bigger fish to fry than trying to figure out how to enrich people that own Bitcoin.
That's a very interesting perspective. I didn't think about that at all. But yeah, I mean, if you really could cash out on that big bump. And I think with both RFK and Trump going to the Bitcoin conference in Nashville and speaking, and then seeing RFK coming over into Trump's camp, that was probably a lot of confidence for people. And I guess maybe a lot of people did cash out. That's why the prices went down. Let's talk about. Of
course. And look at MicroStrategy. Since Trump was elected, they've bought, I don't know, over 10 billion, way over of Bitcoin. And the price has gone down despite all that buying. So some people did sell. And I think a lot of the selling was people who donated to Trump's campaign in a big way because they wanted to get a return on their investment. And they did.
Interesting.
But you've got all the little guys, the suckers who are holding the bag because they didn't sell, because they were FOMO'd. They were afraid of missing out on the big run to 1 million. And, they were too greedy, and they're still too greedy to sell. Most people don't want to sell their Bitcoin because they think they're going to become super rich if they just hold it. So far that has been true. If you bought your Bitcoin 10 years ago and you never sold it, you're in much better shape than the people who sold. But that's only the case because we're at 85,000. We go down to 10,000. That's not going to be the case. People who sold will be much better off than the people who held on.
So on a personal note, and I know you had somebody, I think, gave you a wallet or whatever with some coin, and I think you had said you lost the password or something. But Do you wish that you would have bought Bitcoin back then? And I mean, it obviously, I mean,
Look,
and would you have kept it this long, Peter, or would you have sold it like I probably would have, 10 times already?
well, there's no way to know for sure what I would have done had I bought it when I first heard about it. When I first heard about it, it was very cheap. And of course, I regret my decision. I thought about doing it. I thought about it. I might have done it. If I could go back in time, I would tell myself, "Hey, you can put all your money into Bitcoin." Right? I
It's-
mean, who wouldn't? Right?
Who wouldn't?
Knowing what happened, probably if I went back into time and I put all my money into Bitcoin, my doing that probably would have screwed it up and it wouldn't have even worked. I would have probably lost. It probably never would have got up. I would have bought so much of it. If I knowing what happened, I'd go back in time. I'd buy so much Bitcoin that there'd be nothing left for anybody else. So it never would have amounted to anything.
That's
Probably would have
hilarious.
bought too much of it. But
Oh,
look, yeah, if I'd have thrown in 10 grand, 50 grand when I first heard about it, yeah, I'd made $1 billion, assuming that I still held it.
right.
Right?
That's right.
But,
Yeah.
obviously, I wish I had bought it, but I outsmarted myself because I didn't think it was going to work. And I still don't think it's going to work. But what I did underestimate was how foolish other people would be in their belief that it would work or their own ignorance or their own greed. I mean, it was an opportunity for me to make a lot of money off the foolishness of other people. Had I had the foresight to realize they'd be that dumb. But it's not just that dumb. I mean, the people who got into Bitcoin later on, there was some big money that got in when Bitcoin was maybe, 300, 400, 500. You know, I think some people took some meaningful positions at that price point and did a fantastic job of hyping it up and marketing it and creating this gigantic cult of Bitcoin, which has grown, to a degree that I couldn't have possibly known about in 2010 when I first thought about buying it. So, but
Okay.
when I thought about buying it again after it went up to 1,000, right? And I'm like, shit. I was like, shit, I could have bought that for next. I could have made a lot of money. When it pulled back to 2 or 300 and it kind of stayed there for a few years, I thought about, maybe it'll go back up. Maybe it'll go above 1,000. Maybe I should buy some. I mean, the chart, I looked at the chart and I saw some, I had other friends that hedge funds, people were, hey, they're buying Bitcoin. I'm like, really? They're buying Bitcoin? And I thought, well, shit, I guess there's some people buying it now. I mean, maybe it's going to do something. And I just couldn't get over the fact that I didn't buy it at $1. And I'm like, shit, I'm going to pay 300 for something I didn't want to buy at $1. And I guess I should have done it because then I could have. But the question is, where would I have sold it? I mean, I'm sure I
Right.
would have sold a lot of it. Maybe I'd still have some of it. I don't know. But I'm sure as hell not going to buy any of it now. And had I bought it back then, I wouldn't be buying more now.
It's funny hearing you talk about it and the people that have jumped on and not understanding why they're buying something that doesn't really, in my opinion, even exist. I mean, it's like it sort of reminds me of the day of the pet rock, when you could go into the convenience store and buy a stone and they called it a
Yeah,
pet rock and people actually bought it. And hey, I'm
yeah,
sure somebody made a lot of money selling
but
pet rocks.
right, but at least you could use it as a doorstop or a
That's right.
paperweight.
Right.
Maybe you can put it in a fish tank. I mean, it had some use.
That's right. You could hit
But
yourself in the head with it.
well,
That's right.
look, the only thing that's useful about Bitcoin is that if I have some Bitcoin in my wallet and you have a wallet, I can send you some of my Bitcoin. I don't need an intermediary. I don't need a third party. But there are thousands of other cryptos where I can do the same thing. Now you could say, well, there's more confidence in Bitcoin, there's more reliability, and that may be true. But at the end of the day, the Bitcoin itself doesn't have that much value. It's not going to work as a store of value, and it's not a good unit of account or a medium of exchange. So it has some features that are not necessarily unique to Bitcoin. But the problem is too that the potential for the price to collapse is so great that I would have, no comfort in putting any significant amount of money into Bitcoin because I would be so worried that the price would collapse.
I can't imagine going out and using Bitcoin as a currency that you would use on a day in and day out basis and going and buying a car today and then all of a
Yeah.
sudden
I
realizing
mean,
it's like tomorrow I could have bought that car for $20,000 less. I mean, you wouldn't make any decisions. It's so
well,
volatile that
we
it's
already have an example. They tried it in El Salvador. They not only they made it legal tender, and they passed a law that required merchants to accept Bitcoin, right? You had to accept it. And even then, hardly anybody used it. Um, and it was like only a tiny percentage of the population had even done it once, let alone a repeat. And recently they repealed the legal tender law. And so now accepting Bitcoin is optional, which of course that's makes it the same as every other country. I mean, any merchant could accept Bitcoin if they want to, but none of them do. And now none of them accept it in El Salvador either, probably, except maybe there's a couple. But it didn't work. It didn't work in El Salvador, and it's not going to work anywhere.
let's talk about the stock market. Investopedia came out with an article on the 26th. Magnificent Seven stocks slip into correction as Nvidia earnings on deck. The three key takeaways really here. I mean, these Magnificent Seven seem to be carrying all of the weight. What's your opinion on the stock market, the risk of the stock market right now, and do you see a major crash or downturn coming?
Yeah. Look, you don't want to buy any stocks that are in a group with an acronym or a name, like the FANG stocks or the Mag 7, because it means they're overpriced. They don't name the group until it's way up, right? When there's a bunch of cheap stocks that no one's paying attention to, nobody bothers to come up with a clever way to refer to that group, right? I mean, maybe the dogs of the Dow, but there's not that many people that want to buy the dogs. Usually by the time you buy into a group of stocks, go back to the Nifty 50 back in the 1960s. What was so nifty about those 50 stocks? Well, they had gone way up, Polaroid and Xerox and whatever the stocks were back
A
then.
lot of them don't even exist. Right?
Yeah, of course, a lot of them went bankrupt. Yes. I have, I don't know what I do with them. I had them as props, but I had these share certificates that my grandparents had bought for stocks back in the 60s. Companies I never heard of it. They're all worthless. They're companies
When you
went
used
out
to
of
have the
business.
certificate, right? Yeah,
Yes. Yeah, they
right,
got the certificates
right.
in their that's what a stock portfolio was. Your portfolio was a book where you kept your certs in like you put them in pages like a photo album, right? That was your like a model would have a portfolio. She's got, all of her headshots and various magazine covers in a portfolio. That's where you had your stock certificates was in a physical portfolio. But yeah, a lot of these companies went belly up, from the go-go era of the 60s. And of course, we went through something very similar during the dot-com bubble. And so look, there's a lot of stocks that are going to go broke today. I think AI is real and I think it has a lot of potential, but just like railroads were real, most of the railroad companies went bankrupt. And of course, we ended up having railroads all over the country. Of course, we don't have the rail system today that we had, in 1900, but in the mid 1800s, a lot of rail companies were formed and there was a big bubble in those stocks. People were right. I mean, railroads changed the country, but a lot of the early companies went bankrupt. Same thing with the automobile. I mean, think about all the automobile companies we used to have. We hardly have any of them now. I mean, a lot of them went under. Of course, the automobile revolutionized, transportation, from horse and buggy days. But a lot of the auto companies went belly up, the early ones. And so, yeah, you'll have the same thing in AI. But I think the real bubble, the biggest bubble, the epitome of it is in crypto, because it's not just Bitcoin. There's an entire crypto industry, that's been built up. You have all these companies. And interestingly enough, and I talked about this in my podcast, look at all the Bitcoin miners. They're at 52-week lows. They're at multi-year lows. They're at all-time lows. Every stock that is in any way related to crypto is in a bear market. You can't find one that isn't. So think about that, right? The air is already coming out of this bubble. And I think pretty much every one of these stocks is going to go bankrupt. I don't think any of them are going to survive. I don't think there's anything real under there. I think the whole
Wow.
thing is hype, and that includes Bitcoin.
Wow.
It's dangerous. It's bad economics because the country is wasting a lot of resources on this industry. A lot of, energy is being consumed by this industry, a lot of human talent, a lot of smart people that could be putting their minds to better uses are instead, in the crypto industry. And I think that's one of the worst things that Trump has done is to encourage more malinvestment in this industry by saying he wants to make America the crypto capital of the world. I mean, why would we want to be the crypto capital? We'll be the laughing stock of the world. Why do we want to lead the world in a bubble, in a pyramid scheme? The Chinese were a lot smarter. They outlawed it. They're like, we don't want any part of this crap.
What do you think about the tech stocks like Meta, for instance? I mean,
look, Meta, I don't even use Facebook anymore, but obviously Meta's, I use it, but very rarely. But Meta's obviously a lot more than that. I mean, no, that's Google owns YouTube. I forget Meta owns Instagram. Yeah, I use Instagram.
WhatsApp.
So,
Yeah.
but I think I think they bought Oculus. We got a couple. My kids have a couple of those VR things. But I don't know what happened with the metaverse because they changed their name to Meta, and I don't really think they're doing much with the metaverse. Now they pivoted into AI. So I don't know. I mean, it's a big company. I'm not interested in buying stock in these companies. But it's part of the Mag 7, isn't it? Isn't it the M?
Yes. Yes. Yep. Yep.
It's the M in
Yeah.
Magnificent.
Yeah. Magnificent. That's right. Well, let's talk about gold and silver. You had mentioned when we had spoken prior to Trump being
Well, actually, I don't think
elected.
it's an M, but yeah, that's Fang where they had. I think it's,
Yeah, but
but
they're
it was
definitely one
part
of the
of Fang.
Magnificent Seven.
When it was
Yeah.
Facebook, it was the F in Fang, right? It was.
Yeah, yeah, but I think they are part of the Magnificent
Well,
Seven.
yeah, but it's not. It doesn't spell magnificent. They just
No, right.
there's just 7 stocks in it.
Right, that's right. The let's talk about gold. You had said that if Trump were elected, that wouldn't be that great for gold, but since Trump was elected, gold seemed to continue to rally. It's had a little bit of a reprieve, but are you still expecting gold? I mean, I know you had mentioned that I think you maybe even mentioned a $10,000 number on gold. I mean, do you think gold is going to continue to go up? Do you think it's I mean, obviously you have a gold company, Schiff Gold. Tell us your thoughts.
Well, look, I think gold is going a lot higher, and I didn't say that Trump was bearish for gold. I said that I thought that gold would do even better under Harris than under Trump, but I thought gold
you're
would
right.
go up regardless of the outcome of the election, because inflation is going to be here, and inflation is going to be worse under Trump than it was under Biden. Now, had Harris won, maybe it would be even worse under Harris than it will be under Trump. But inflation is going up, and people are going to be getting out of the dollar and looking for a way to escape that inflation tax. And they're going to do it with gold and silver. And right now, it's just the central banks around the world that are getting out of dollars. But eventually, the public will catch on. A lot of the people who are now buying Bitcoin will start buying gold. And a lot of people who aren't buying Bitcoin or gold are going to start buying gold. A lot of more sophisticated investors, a lot of investors who are now buying Magnificent Seven stocks are going to be buying gold stocks, right? All this is going to happen. But I would rather buy before they do. That's how you get a much better price. And even more important than buying gold at $3,000, which, we're 2,900 now. So, we're practically at 3,000. The gold stocks aren't even priced for $2,000 gold, let alone 3,000. But gold's not going to stay at 3,000. By the end of the year, it's more likely to be 4,000 or higher than 3,000. And then it's going to be higher still the year after that. these gold companies are going to earn a fortune. I mean, they're literally gold mines, right? These gold mines are gold mines, and people don't recognize that. So that's what people should be loading up on. When I first started telling people to buy gold, it was $300 an ounce. So it's gone up 10x. Most gold stocks haven't gone up anywhere near that. In fact, a lot of gold stocks are lower than they were 20 years ago. So the gold industry as a group is a fraction of what it was 20 years ago. So it is a steal. Nobody is investing. These stocks are cheap as they've ever been in their histories, based on all sorts of metrics that you would use to value a business, to value a stock. That's not going to last. So that's what, I think people should be buying. I have a gold fund. Euro Pacific International Gold Fund, EPGIX, is the no load symbol. You can buy that fund at any discount brokerage firm. I think we've got a phenomenal portfolio of stocks picked by Adrian Day. He manages the fund for me. I think when gold really starts to go, this fund, I think, will be the number one gold fund out there. I think we've built the best portfolio, so people can buy it no load, at any brokerage firm. You can also buy it if you don't have a brokerage account. You can go to my website at europac.com and just buy the fund. I think it's a $2,500 minimum. Just buy it directly off our website. And of course, you can talk to the representatives. And we also have separately managed accounts where we manage portfolios of individual mining stocks. We build a portfolio for you that's going to include a lot of these smaller companies that would never be on your radar, but Adrian knows about them. And these are the stocks that I think could be, the home runs, not just, even a 5 or 10 bagger, but some of these stocks could go up 50x, 100x, by the time it's over. I mean, some of these stocks may look like Bitcoin as far as the kind of gains that they may achieve. If gold goes where I think gold's going a lot higher than 10,000, 20,000, 30,000. But I don't think the cost of mining it will go up nearly that much. I mean, they're going to go up because inflation is going to make everything go up. But I think it's going to make gold go up much more. And so the economics of these gold mining companies are going to improve dramatically, and that will be reflected in their share price and their dividends.
Peter, I want to pull up here Euro Pacific Asset Management because, and the reason I say this is because I've had some of our audience that has reached out to me wondering, and I think I just want to clarify this for everybody because a lot of people are unsure of, because you're in Puerto Rico, of whether it is allowable for people on stateside to do business with Euro Pacific. And of course, I've said 100%. But can you just talk to that so that people listening can understand that just because you're based in Puerto Rico, that is still part of the United States and that you still can help them?
Yeah, I mean, my business, first of all, isn't even regulated by Puerto Rico. It's regulated by the SEC. So the same as every RIA anywhere in the United States. And our accounts are held primarily with international broker, IB, and all that's in the United States. So I'm physically located in Puerto Rico. The portfolio managers reside here in Puerto Rico, and your advisors are here in Puerto Rico, but your money is in the U.S. And you're regulated by the SEC. Unfortunately, I mean, I just assume there not be an SEC, but
maybe Trump will lay them off. maybe Trump will lay off the SEC.
But yeah, and so there's no practical purpose, or difference rather. The IRA used to be based in California before I moved it to Puerto Rico in 2014. But for the customer, there's no difference. I could be in California, I could be in Puerto Rico. The money's in the same place, and the regulators are in the same place. The only benefit is to me because I get to live in Puerto Rico, and I also get to pay much lower taxes. But that doesn't impact any of the clients.
Yeah, thanks for clarifying that. And again, we do have all of Peter's links in the show notes. Let's talk briefly about physical versus the stocks. I hear a lot of people say, you should have both. Some people say, well, you should have more physical. Some people say you should concentrate on gold more than silver. That, for one, it takes up less room, or you can,
Yeah, yeah.
just kind of talk a little bit about the physical versus the stocks, and what should somebody have as far as a balance.
Yeah, well, I've been a big proponent of physical for, again, over 20 years. Everybody should own physical gold and silver. And we've mainly focused on gold over silver. Um, and more recently, I've kind of switched my focus more towards silver, given that silver is so cheap now relative to gold. It's basically historically cheap. So I think that now people should be buying more physical silver than physical gold. But I actually think the best thing you could do right now is the mining stocks. So, I mean, because when you buy into a mining stock, you're owning gold. It's just still in the ground because that's the asset of the gold company. Like if you buy into a real estate investment trust, you're buying into real estate. You're a shareholder of a company that owns rental properties, right? So you own a little piece of that property. Well, when you buy into a gold mine, what are the assets that you're buying into? You're buying into their reserves, their mines. They have gold in the ground, and their business is to extract that gold from the ground and bring it above ground where they can sell it. Well, right now, the cost of buying gold in the ground is is historically cheap compared to buying it that's already been mined and refined and turned into a coin. So for now, and I don't know how much longer this will be, but for now, that's what I would do. If I have money now and I don't have any money in gold, my first thing would be to get some mining stocks because that's where I think the big bang for the buck is going to be. I mean, let's say gold goes from 3,000 to 4,000, which I think it will. That's about a 30% increase. I think gold stocks could go up 5 to 10 fold on that move
Well,
because I think almost all of that increase will drop right to their bottom line. And so rather than buying, $10,000 worth of gold and turning it into 13,000, I'd rather put 10,000 into mining stocks and turn it into 50 or 100,000. Then I can sell some of my mining stocks and buy my physical gold, right? And in the future, I think if these stocks aren't this cheap, let's say, 6 months from now or a year from now, they've doubled or tripled, I might say, okay, they're not the super bargains that they were. Maybe buy some physical gold. There's a little bit more risk. You know, I just think that right now these stocks are so cheap and the upside potential is so great that it's the stocks that people should be thinking about. It's gold stocks, not how can I buy gold coins or bars, even though, we got a gold business. But what I'm saying is right now, I think you have such a great opportunity buying into the gold mines that's where I would concentrate my money. That's where my own new money. If I have, I put new money to work, I want to buy these mining stocks. I don't want to buy more physical. I want to buy the stocks.
well, you've done really well. So I think yeah, I want to listen to you. So, well, Peter Schiff, I can't thank you enough. People reach out to Euro Pacific.
Yeah, go to Europac.com, get all the information on our gold fund, Euro Pacific Gold Fund. Talk to their advisors about setting up these separately managed accounts where we can manage a portfolio of these mining stocks. And then when the time is right, you could take a little off the top and buy some physical.
Yeah, and it's also important to say, look, guys, I'm not being paid to say this or have Peter Schiff on our show. I personally value Peter and his opinion. He's been in the markets for a very long time and someone that has predicted and called a lot of the downturns. It's not easy to do, by the way. A lot of people want to say, well, a broken clock is right twice a day. What you don't understand is there are a lot of forces that are out there that slow down the process. But I truly believe that we're in a very unique time where this can has been kicked down the road, this everything bubble that has kind of been happening. And Peter, I can't thank you enough for coming on, addressing our audience, for giving us your time. Sure, thank you so much, and I look forward to our next conversation.
My pleasure, Todd, and keep on doing what you do. You do it so well, and I'm glad you're out there. We need more people like you and I, in this independent media, because the mainstream media, for all practical purposes, is pretty much worthless. So if you really want to know what's going on, if you really want to get the truth, yeah, you're going to find it on the internet.
And again, best success to Lauren. So big shout out to Lauren Schiff. And we will drop her new song links down in the show notes.
Yeah, by the time this is dropped, her fourth song,
that's awesome.
Lucy will be out.
Cool. That sounds good. We'll be talking to you soon.
All right. Bye-bye.
Thanks so much for watching. If you like the video, you can let us know by smashing that thumbs up. And if you haven't already subscribed to our channel, please consider doing so now. Hit that alert bell. You'll know every time we upload content just like this. Keep those comments and questions coming. And one of the biggest compliments you can do for us all here at Sachs Realty is to share our channel and this video with your family and friends. This will help us to continue to build this amazing online community with viewers just like yourself. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.